Hello, traders. Gary Wagner with the gold forecast here. Approximately 10:30 a.m. in Honolulu, Hawaii. It is Tuesday, the last day of the month, May 31st, and this is the daily report. For all those in the mainland, I trust that you, as I did, had a great 3-day weekend. It allowed me to recharge. I did submit a article and commentary to Kitco. We'll be spending a couple of moments going over those charts live today, all on today's daily report. We do have gold trading quietly, but trading down just a little bit. Currently trading off about $3. As you can see, trading at 1534.80. That is our current print. When we take a look at it, that is right here. We're looking at a 60-minute candlestick chart. And the reason for me to starting off with that chart is to basically show you a marketplace with non-activity. In other words, we've got a marketplace that has been trading in a very, very tight, narrow band. You can see that right in here, and really needs to break out of this trading range itself before we do our next observation. Traders, I want to spend a couple of moments. We're looking at a 360-minute, a 6-hour candlestick chart. And on this candlestick chart, as you can see, I have put up a couple of different Fibonacci retracement areas. And the one that I want to spend the time with today is this one here. And it's simply from our record top at 1577 to the bottom of this retracement, call it 1480 right in here. And when we do that, we get, of course, 38. That's from our larger one right here, 23, and then 38. And then this 38 and this 23, let me go ahead and highlight it so you can see the difference. These are from our longer, deeper retracement lines. And what's of interest is that this 23% retracement area from our long retracement area, and I'll shrink the chart before we alleviate this chart for the day, so to speak, so you can see where that's coming from. But what you can see on this is that as this market traded higher, it didn't quite come up to that. And you can see that it, in a couple of occasions, it's tested and used this really to form a base. Market then comes back up. It does find resistance in this area. And then, as you can see, has currently surpassed it, and I believe is forming a base above this one area of 1530. As you can see, the market has traded, these are 6 hours, so over this period, it has traded quite eloquently above this one retracement area. I think that if that area holds in here, it's going to form a base before tracking and then trading a little bit higher. Now, in terms of where that retracement area comes from, let me go ahead and shrink this down so you can see that. You'll notice that the retracement area we were looking at is this line right in here. And this line right in here. And you can see collectively my retracements are coming from 3 different areas. 1, 2, and then 3. Those are the way that I'm putting them in to capture these various areas to look at potential points in which we think that the market, if in fact finds support or resistance, we have a logical benchmark or point in which we can look at to see if it sustains or moves to those areas. Traders, this is one of the charts that I used for the Kitco article. It is a static chart, so you won't see it move during the day. I did do the article on one of my other computers, so I've simply put the image over here. And what I want to talk about very briefly are the different areas or targets that I was looking at and looking for. Simply what we did is we took wave 1 and we took wave 3 and we did some analysis. The analysis is as follows. If wave 5 simply equals wave 1, this takes us to our first target, and this is 1606. If it moves to 1.61%, you can see this up here, which I believe is 1686. That's first set of targets. Second set is this target of wave 3. Wave 3 simply being an equal move is right here, which takes us to 1663. Now, you can also see what I call my favored zone. And this is the target that I believe is most likely in terms of where this marketplace might go. So you can see that the target that I am looking at right now is starts at just above 1600 and goes to a top of about 1660. That's this what I call the sweet spot, or my favored target zone, in which I think that this marketplace has an opportunity to go. So really what I would be looking at in terms of this is going to be, of course, wave 5. Wave 5 will be composed of a 5 count, so it's not going to be straight up. But I do believe that what we will see is once this is resolved, the first thing is I think we'll get a new high. I think we will break this 1577. I think at minimum we would look at is going to be just above 1600. Test 1600. That's going to be the top. That's going to be the conclusion of wave 5. Anywhere between that, this is a 76% move of wave 3, which would take us to 1618, and then on the high side is about 1660. These are the areas that I'm looking at right now, right in here. And as I said, this is that what I'll call my sweet spot or target in which I think this market has the opportunity to go to and has the highest probability, should we be correct, and this market continue on its upward track. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange